Big announcement today, guys, by Bank of Canada. Everybody's talking about it. We got a 25 basis point cut. The question is, where do we go from here? Let's talk about a few things here. What's the future of rate cuts look for the rest of the year? The second is, what is the sentiment right now? Where is the market today? And what are the underpinnings of this market? What's the demand and the supply situation? And then we can look at how do we see the market moving going forward. The Bank of Canada key interest rate is now at 4.5%, down from 5%. So this is the second cut, as you all know. Let's check at what other announcements are coming for the rest of the year. There's one on September 4th, October 23rd, and December 11th. Assuming that they keep cutting by 25 basis point at least, we're talking about another 75 basis point rate cut for the rest of the year. Let's look at our friend Joe Pereval's mortgage information. What do we see latest? We're seeing 3-year fixed rate at 4.99%. And then the variable rate is 5.9%. Now, I don't think this takes into account the 25 basis point cut because the prime has not been adjusted by the major banks yet. So we are talking about 5.65, somewhere there, the variable rate. Okay. So this is where we are today. Now, if we go down further by 75 basis point for the rest of the year, our variable rate should sit around 5%. And the fixed rate hopefully should be around 4.5%, somewhere there. Okay, it's obviously related to the yields and the bond market, but as the variable rate goes down, that will happen because inflation is easing, and so will the fixed rate will go down as well. Now, what is going on in the marketplace? Let's look at the data. So number one, we'll look at the last report from TREB. And now we're talking about detached homes. And if you look at the sales volume for detached homes in all of GTA, it's about $4.4 billion of sale in June 2024. Compare this to June 2023 was 5.1 billion. So that's probably 10 to 15% lower than the previous year, last year. So the sales volume is down. We also see the median prices is dropping. So we had in June 2023, it was 1.34 million for a detached home in the GTA. Right now is at 1.285. That's about 5% below. So the prices are down. And this is the most important chart, guys. Look at the inventory in June, in July. Well, we don't have the July 24 data, so let's compare to June 2023. We had 6,500 about homes for sale, detached homes for sale at that time, and today we are seeing around 10,000 plus homes. So there is a bunch of inventory buildup, and you can see in this graph. Look at the blue line there; it's rising. It's like a rocket because things are not selling, and this the red line, which is the demand side. What is selling actually? It's tapering down. So you see the gap between demand and supply is really a lot. And if you go back to just February this year, the gap between demand and supply was much smaller, right? So what do we expect in the future? The rates are okay. I mean, rates are going down. It's great psychologically. People have some relief, especially people who bought at the peak of the market in February 2022, early 2022. They bought at very high prices, and many of them went for variable rates. So they bought at very high prices, and their rates were low. And as the rates climbed up, they were in real stress. So good for them. They're seeing some relief, but it's not enough yet. I feel that we need at least 100 basis point of more cut, which will take us to early next year, just early spring market, before we see more buyer activity, before we see this excess inventory flushing out of the system, and demand and supply getting more balanced together. Now, how many people are in the sidelines right now? So 35% are still on the sidelines. Are they going to come to the market right now? maybe they will trickle. I would say is maybe 5% for every quarter basis point rate cut, right? So as you get to 1.5% rate cut for in the next 12 months, you're going to see full market activity coming back. So hang in there if you're looking to buy your first home, or if you're looking to upsize, upgrade, and if you like to have choices, and if you like to negotiate well for that dream house of yours, this is the time from now to the end of the year or to early spring. Next year, we're going to see a lot less options as the inventory tightens. And for you can always go for a 3-year fixed rate or 2-year fixed rate, and short term you pay a little bit more, but at least you'll have a dream home at a right price. As the rate goes up, there is an inverse correlation between home prices and mortgage rates. For based on the last 24 months of data, for every 1% reduction in interest rate, home prices go up by 5%. So if the rates go down by 1%, 1.5%, we're talking about 7 to 10% increase in the home prices. So that's all the data for you. If you are interested in buying and selling, of course, reach out to us. We can educate you on the market and how it's evolving, and we can give you some advice on when to enter the market and for what kind of asset.